Hi everyone, welcome to Wealthy Mindset. My name is Oliver. Thank you so much for watching. I really appreciate it. Hope you're having a great day like always. In today's video, I'm going to be talking about the stock market in terms of the Dow Jones, where it's going to be heading. Is it going to go up, down? Is it going to be crashing, correction, etc., etc.? So now, quick disclaimer like always, I'm not a financial advisor. I'm not a professional, and everything I do share with you guys is just my opinion. It is not advice, so please do not buy or sell based off the information I show you or the opinions I do form. Now, moving forward in terms of overall market, I'm extremely bullish, and I'm going to explain why in terms of fundamentals, in terms of graphs, levels, resistance levels, support levels, and all that stuff. But in terms of the pandemic relief bill, it passed the Senate, going back to the House, most likely going to pass it at ease, going to pass it in terms of the president, just because they're trying to target passing on by March 12th, hypothetically March 14th at the latest. So now you have an influx of stimulus checks coming in, plus you have it related to the vaccine kind of stuff. So people would hypothetically start going out more, and then the economy should be rolling back up again. We have 2 to 3 states already opened back up in terms of removing restrictions. So hopefully overall that could be a catalyst, because we have a lot of people who've been saving a good amount of money, because if you can't go out that much, you have hopefully funds being saved up. So you have stimulus checks coming in as funds, you have saved up money. So all this influx of money coming into the economy in terms of spending is building up. So that is a good sign in terms of boosting the economy, hypothetically. So we'll see what happens. But if you're a new viewer on my channel, we have an upward trend resistance line dating back since the dot-com bubble, more specifically 1999. Resistance line right here, you can see dates right here. Passed it ever so slightly at the dot-com 2000 all-time highs, but it was a false breakout, came back down, and then didn't test it again ever since 2018. Had a false breakout a little bit, but couldn't pass it fully. Then just before the pandemic, back tested it twice, and then came back down, created an upward trend support line right here, one touch point, second touch point, third touch point right here. And then the significance of it, now the reason why I'm bullish in terms of the graph wise, is we passed the upward trend resistance line since 1999-2000 right here, stayed above it, and then technically on the 5-year chart we bounced off as support and still stayed above it. So that's pretty good. We didn't continue on the upward trend support line dating back since the bottom of the pandemic. That's the unfortunate part, but hopefully we get back up above it and then stay above it. Now I'm going to get into some fundamentals quickly. So not only did the pandemic relief bill pass, or it's almost about to pass, this is in terms of the US states bankruptcy, like companies wise, and it's pretty low. It hasn't increased. So 2012 all the way through, and it's still pretty low relatively than in the past. And then if we look at unemployment for the US unemployment rate is decreasing. Yes, it's not extremely low as it used to be, but it's at least decreasing, so you see improvement. Then you have the corporate profits, and believe it or not, corporate profits actually have spiked up higher than before pandemic. So that's another thing, which is pretty crazy. So just before the pandemic, your corporate profits have gone up higher than that. Also, in terms of that, if you've heard of the chip shortage, that's another indication too. When you have a chip shortage, what it means is there's actually demand more for, like, these chip shortages are for electronics, right? And like for vehicles, like for example, GM is having issue in terms of chip shortage for the modules and all that stuff. So that's another good indication that the economy is picking up. And the next thing is interest rates are still low, so that's good, 0.25 basis points. And the reason why it's important is because when interest rates are low, companies can use more money and borrow more money, and then increase their earnings because they're investing more in terms of research and development and all that stuff. When you have high interest rates, they can't invest more in terms of research and development, so therefore it could hinder their earnings. And if earnings are hindered, then their price to earnings ratio would be lower, and then people won't invest in hypothetically those stocks because they'd be overvalued. Now, one thing that could hypothetically lower or increase interest rates that people are worried about is a 10-year treasury. And they're more concerned about the rate that it's increasing, not necessarily the level it's at. The only thing is, though, Federal Chairman Powell, Federal Reserve Chairman Powell, basically stated that this is just a technical standpoint in terms of the numbers for the 10-year treasury. He said, don't worry about it. does not reflect the real world. So we won't be increasing the interest rates based off the 10-year treasury. So that's a good sign. You wouldn't have to worry about that, hopefully, if it's true. Now, if we look back at the graph, given all those fundamentals, the reason why I'm optimistic too is we have all those catalysts coming in. But if you look at the 5-year chart, we did not break the downward trend resistance or upward trend resistance line. We did go a little bit negative right here in terms of MACD, but above both moving averages, short and long. But then now we're back up in the positive. If you can see right here in the MACD, it's really difficult to see, but it's green nonetheless. If we move to the 1-year chart, we're above it, bounced off the short moving average, above the long moving average. MACD line looks like it's going to cross over to a positive, so that's another good sign. Then if we look at the 1-month chart, and then one thing I want to show, with the 1-year chart, you can see a double bounce right here. So it still has support to the upside because it's acting as a support line nonetheless. You could argue it was the short moving average that acted as support, but either way, I'll take it. It's still good. Now, if you move to the 1-month chart, this is where it gets interesting. So we had a downward trend resistance line right here, and then we went below the moving average, or below the upward trend resistance line for the 1999-2000. All of them I mentioned were the 1999-2000. Now, we did bounce off it twice as support, but then when we went underneath it, we basically back tested as resistance. This is where it got a little bit scary because I was like, oh wait, we might end up heading lower, even though all the fundamentals technically line up for being in the positive, right? But we ended up passing it because I think during this time was like the Senate passed the bill, or the House passed the bill, and then here's like the Senate passed the bill, which is significant because it helped us pass this downward trend resistance line. Now we're above both moving averages, not just above the upward trend resistance line, but we're above the resistance down here, the downward trend resistance line, the moving averages, and then the MACD line is crossing over to negative, but I think it's going to be a quick dip like this. So the plan is potentially for like tomorrow, which is March 9th, 2021. I think we're going to come down to the 31,459 points, somewhere around there, and either bounce up on the support line or bounce up on the long moving average or bounce up on the short moving average. The support line I'm talking about is right about here, so you can see a touch point right here, touch point right here. Where actually when I measured it, it was like a clean touch points all the way across. It's one of these levels, but either way, so I probably should have marked it, apologize. So that's the plan. I think that's going to happen, bounce back up to the upside, but ultimately have issues back up again, passing at this level, even just probably clean 32,000 and like 9 points. We might have issues passing that. Now, the plan is to get back up to this upward trend support line right here. You can see from the bottom of the pandemic, get back above it, and then start continuing, like bounce off it completely too. So get above it, bounce off it completely, and go straight up to the upside, creating new all-time highs. The only thing is we're having issues with that. So until then, it's just going to be back and forth, back and forth. And then technically in play, if people start panicking, if we end up starting going low, I'm going to switch it to the algorithmic view because that one's a lot easier in terms of seeing these levels. So the first level we're going to have to be not concerned about, but we could be dropping down to 31,249 points, right? And then once we pass it to 31,249 points, we could ultimately start seeing again 30,938 points, and then seeing, I'm just going to go quickly with these levels. So 30,812 points. There's a reason why I'm mentioning these, by the way. So 30,544 points. And then this is where I think we're going to enter the correction territory and then potentially crash territory if we hit 29,796 points. So let me just double check. Yeah, that's what it is. Okay, so ultimately, so 29, yeah, okay. So once we hit that level, and like not just hit it, sorry about that. Hitting it is not the issue. If we don't bounce above 29,796 points, so plus or minus, let's just say 50 points, not base points, but points. If we break through 29,700 points clean, let's just say that, just to cover false breakouts, and do not bounce back up to the upside like this and just keep continuing down, then I would say we're entering correction and crash territory. I would say first correction because we have fundamentals to back it up in terms of, I'm optimistic overall in terms of at least, like not in terms of like the long run, but at least for like the next year and a half, because we have an influx of funds coming into the economy. That's the thing. So given that, I would assume it's a correction, and then stay tuned. If you're interested, I'd highly encourage you to subscribe, because then I'm going to determine where the bottom would be if we were to go lower. But that has to be assessed by like week by week, day by day, unfortunately, because it's pretty difficult until you see it actually play out, at least going towards a direction. Then you can predict the next few moves, not the next 10, 20 moves. That's pretty difficult. That's the problem. So, but yeah, thanks again for watching. I really appreciate it. Hope you guys did like the video. If you did like the video, consider dropping a like. Helps out the channel a lot. If you do like videos again about like these videos, stocks, mortgages, credit scores, financial freedom, passive income, definitely encourage you to subscribe. Thank you so much though. I really appreciate it. And if you have any questions, do not hesitate to ask. I'll try to answer them as soon as possible. And also, I'll link everything down below in terms of sources if you do want to check them out. And that's pretty much it. Thanks again for watching, and I'll see you guys in the next video. Peace.